Well, here we have another problem. We're given, again, a different set of trial balance information. It's got a different set of numbers, so on and so on, and maybe it has some different accounts. And in this one, excuse me, they want us to prepare a statement of owner's equity for the month of October. So, statement of owner's equity is simply just a little story. It tells a story of what happened to the owner's equity from the beginning to the end of an accounting period. In this case, it's for the month of October. So let's put this together. Notice again that this set of trial balance information is different from the last problem, which would be the one, if you're following along with this, it'd be the one we just did before this one. And again, the statement of owner's equity is for a period of time. Could be a month, could be a year. In this case, they want it to be for the month of October. And the way this statement starts out is, has a heading, says Statement of Owner's Equity for the month of October. And on October the 1st, this capital account, Owner's Equity, was the beginning balance of 0. We have to assume in this problem that this was the very first month this company was in business. It says a new consulting firm on October 31st. And they started new on October the 1st. So on October the 1st, their capital account or their owner's equity was 0. And the next thing we want to do is we want to add things to this capital account that increase it and subtract things that decrease it and come up with an ending balance for the month, actually at the end of the month, which was October 31st. Now, we had during the month owner investments. Anytime the owner invests in the business, that increases the owner's equity, and that came from this trial balance information, $57,950. We also have net income of $5,800. Now, there's two ways to do this. You can do a shortcut, or you can go the long route. I think what I did in this problem to come up with this net income, I just put over here to the side an income statement. I'm doing a real formal. You could just kind of take your adding machine there or your calculator and just kind of crank out this little revenues minus expenses and come up with the net income, and do it really informal, just on the side, on a scratch piece of paper, whatever. And when you do this, that is net income, and that net income is going to increase owner's equity. If it had been a loss, that is, if the expenses would have been more than the revenues, it would have been a loss here, and that would have been a minus here. That would have been a subtract out net loss of whatever it was. But in this case, the revenues were more than the expenses, and this is going to increase owner's equity. In this case, by $5,800. Okay, let's see what else we've got. We also had withdrawals of, withdrawals were $2,000. And don't forget, a withdrawal by the owner is not an expense. It doesn't go on an income statement as an expense. It's just a separate item that's just the opposite of the owner investments. So this withdrawal I didn't put a minus here because it's assumed that when I have less right there, it's assumed that that's going to be subtracted. So 0 plus the owner's investments plus net income minus withdrawals will give us the ending statement, or the ending owner's equity, which would be at October 31st of $61,750, and we're done.